So let's start, why don't we, with Tesla. Phil LeBeau was on a program last night, and he said, nobody wants sedans anymore, but they're selling a lot of Tesla sedans.
They are, Tyler, and the thing is, their production capability. I mean, it was just a few years ago where we were saying, hey, geez, they're only making like 15,000 cars. They're going to produce 2 million next year. And so that's definitely a positive. So it's more of a hold for me than a sell. If you own the stock, I'm not saying to sell it, but I do worry about what's going on with Elon Musk and this whole Twitter thing. He definitely, it's a self-inflicted wound. He didn't have to deal. I'm sorry, but he does have to deal with it, and that's creating some problems. The other thing, though, is I do think you had David Rosenberg on earlier. I think we're headed for a recession, if not already in one. That's tough for car sales, and they do have expensive cars, and so that's going to be a little bit tougher there. So the stock is still expensive. If we're headed to a recession, we're probably going to test the June lows. I think we will. Some of these big cap names, I'm afraid, are going to take it on the chin once again, and you'll get a better opportunity to buy it 6 to 9 months from now.
All right, so Mark, Matt, share your perspective here on Roku, which was a pandemic darling, really.
Yeah, I mean, the one thing with again, we're worried about a recession here, and one of the things that people seem to be complaining about, and rightfully so, I know we do it, is we're loaded to gills with all these streaming services. I mean, do we really need another one, especially where we're going to add some hardware? So that's, I think, going to be tough for Roku to really to pick up the market share that regain or market share going forward. Another thing, though, is also advertising during recessions. If we are going to have that, advertising tends to go down. Now, again, like it is with Tesla, now this stock, like Tyler said, down 85%. I think you'll be able to buy a little bit cheaper. I'm not saying, oh my gosh, this thing's going to zero, they're going out of business or anything like that. But because I do think what they're doing with Walmart, Kroger, some of these combinations, and what they're doing with their new innovation and innovation into the advertising area will allow them, when we come out of the recession, to really build on what they had built, during the lockdowns, and it'll be a much better company at that point. But again, I think it's something where 3-6 months from now, you're going to get a better opportunity.
And finally, speaking of pandemic darlings, there is no name more associated with that than Zoom. But here is a company that actually makes money and is trading at what one might say is a reasonable variable of 22 times forward earnings.
Exactly, Tyler. I mean, I'm afraid a lot of these stocks that in the ARK fund don't make money. I mean, Tesla does, but most of them don't. So this is a good valuation. Again, it's 22 times earnings. It was trading at 170 times earnings less than a year ago. So it's really come down to become attractive. I also think that one of the things that they have some of the things that the businesses that are already developed, like Zoom Phone. I mean, I can't tell you how many times been on a conference call. I mean, Tyler, we were on conference calls for 30 years. They never got any better, until the last year or so with this Zoom call. This is really a much higher quality thing. And so even though people are going to be coming back to work, there's still going to be plenty of people who stay at home on certain days. And so I think this is going to be one that people are going to be surprised can really come back in the second half of this year and in the years ahead.
So it's a buy for you.
Yes.
All right. Matt, thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.